Fox Business Alert, new car prices are in overdrive. According to car market data provider Edmunds, the average monthly payment for a new vehicle is at an all-time high of $766. Again, average monthly payment. I know a lot of you are paying more. The average amount financed is also topping a record at $43,218. These costs are pushing car shoppers to the used car market in droves, where Carvana, AutoNation, and CarMax all operate. And you can see all of them are trading higher month to date. We've got Carvana up 25%, AutoNation up 4.5%, CarMax up 7.5%. But the market has yet to really notice a less crowded play in the auto sector. Valvoline operates 2,300 car servicing stores that provide everything from oil changes to battery replacement and tire checks. All things used car owners need. With me now, company CEO Lori Flees. She's here in a Fox Business exclusive on Valvoline's Investor Day. This is not new to you, that used cars, people are turning to them because they can't afford new ones. How is that affecting your stores?
Absolutely. Used cars, people are holding on to their cars longer and trading into used cars because they can't afford a new one. And what that means is they want to maintain their vehicle for as long as they can. Older cars need more maintenance. That means higher revenue opportunity for companies like ours.
And are you seeing the numbers of people coming in droves, or is it just starting at the moment?
Oh, no, we've been seeing this for a long time. The age of cars has been growing over the last 10 years. It's now over 12 years. The average American owns a vehicle that's 12 years old.
Nearly 13. I mean, back in 2015, the average age was something like 11 years, and now it's nearly 13.
That's right. And so instead of trading up into a new car in those loans and payments that you talked about, it's much cheaper to maintain a vehicle that you have. And that's exactly where we're focused.
And how does the whole shift, at least partial shift, it was way more fast with momentum before President Trump ended the tax incentives for electric vehicles. But people started buying electric vehicles that really, I guess, on the surface didn't need maintenance because they didn't need oil changes, but they still do need tires, et cetera. What are you seeing now that President Trump has ended those EV subsidies?
I think the growth in EVs has really dropped off, and the interest in them has dropped off since the subsidies were removed. The penetration of EVs in the car park is less than 2% today, and it's not projected to grow that much more in the next 3 years. Now, all vehicles need maintenance. Even EV drivers say that they need to maintain their vehicle, and some of that needs to be more than just the battery health. So maintenance providers will provide maintenance to any vehicle, regardless of powertrain, but the growth in EVs has definitely slowed.
And what's your hybrid business like?
We have a very strong hybrid business. The penetration in our stores, or the penetration of the car park, is nearly as high as it is for ICE vehicles. It looks like the demographic of hybrids.
Valvoline is a brand I can remember as long as I've been alive. How long has it been around, and how has it changed in this new world?
So the history of Valvoline started almost 160 years ago when the first motor oil was created. And Valvoline has always been known for quality and innovation in automotive care. And in 1986, that's when we opened our first store to actually give people a high-quality customer experience in maintaining their cars. And we've been growing ever since.
Well, it's a quick service market. It's a little bit fragmented. There are other operators in this space. Dealerships do it. And of course, Costco does oil changes. How do you muscle in, not so much, I mean, you're in 2,300 stores, but into the investor's mind? Because Wall Street doesn't have the story yet. This is a stock that is down today, down over the past month, down year to date. How do you get people to understand and change this picture? Because down 22% over 1 year, what are you doing?
Yeah, I mean, today we had an investor update where we actually shared more of our story and more of the details. I think there's a lot misunderstood. If you look at when we became a pure play retail company in 2022, we've been growing top and bottom line by double digits. Now, we have refranchised stores, and we have taken on a very big acquisition called Breeze Auto Care, which I think has muddied the waters. So today was all about giving investors our clear financial commitments for top-line growth and then growing returns and cash flow over the next 3 years.
Yeah, that was a pretty major acquisition, and so clearly you start to see that in the next year that'll pay dividends.
Absolutely.
This is the season of giving, is it not?
Is.
I always think about Valvoline and the Valvoline, you guys have had calendars in the past, so what are you guys doing for the holiday season? Because I think it's really important to sometimes let investors know that there are companies that do well because they do good.
Absolutely. Our teams are incredible. We have been investing in our communities. We really have a focus on children and children's mental health. And so even just in the month of November, we finished our Children's Miracle Network campaign. We've been involved with Children's Miracle Network for 16 years and have raised almost $10 million. And this year we had a record high, over $1.8 million raised for Children's Miracle Network. Super proud, but we also do local food banks, clothes drives, cystic fibrosis, and Ronald McDonald House. Our team is so committed to giving back to the communities that we serve. It's a key part of our culture.
Oh, Lori, I think that's wonderful, and congratulations to the team.
Thank you very much. Thanks for having me, Liz.
You bet. Thank you.